For those in the restaurant trade, as Al pointed out, this is a grant program. And kind of like free food, free money always seems to taste a little bit better. Let me get a little screen share going here. And we will get started. Okay, hopefully folks, you're seeing my screen.
Yes, we are.
I see it
Good.
fine.
Okay, good. So as Al pointed out, oops, there we go. The Restaurant Revitalization Fund is $28.6 billion targeted to providing much needed economic relief to restaurateurs who've been pretty much the most heavily impacted sector of the economy between government shutdowns, social distancing, limitations on seating, on hours, on all sorts of stuff. Plus you have to deal with everything as an employer in terms of PPE and all those kinds of things. So eligible entities can seek a grant for what they're calling pandemic-related revenue loss, up to $10 million. Granted, most of us are not going to get close to that number. The grant is going to be equal to your 2019 receipts minus your 2020 receipts, plus a few other adjustments. So there are a couple of other adjustments that we do need to be mindful of as we go through this. And there's going to be a lot of documentation and stuff that is required for this. So who's eligible in this? Pretty much anybody. I'll kind of skip right to the end of the slide there. Anybody whose primary business is the service of food and or beverage. So restaurants, food stands, food trucks, food carts, caterers, saloons, wineries, cideries. Now, we did list bakeries and other prepared specialty food retailers. There will be a test that is actually defined, and we're going to get into a little bit later on, in terms of your principal business activity. So if you're a bakery that happens to have a couple of tables in the bakery and you sell some coffee and stuff in the mornings, you've got to be able to separate the food that's served for premises consumption, so the food that you're serving as a restaurant per se versus the food that you're selling as a bakery. And it's going to have to be a significant portion. We're guessing. Now, I should point out that they have not announced. We've only had one meeting on guidance for this program so far. And they haven't come out with the hard rules yet. But if that piece of your business is not at least, let's say, a third of your business or more, you're probably not going to be eligible for that. So the principal business activity at times will exclude some folks, like dinner theaters, depending on ticket revenues versus food revenues. Franchises are eligible if they meet all the other requirements in the program. Bankruptcies may or may not prevent an application. If the business is operating on an approved plan of reorganization under chapters 11, 12, or 13, and meets all the other requirements, it's probably going to be eligible. If it's a Chapter 7 liquidation, not eligible. If you filed a bankruptcy but have not yet gotten an approved plan, you will not be eligible. Businesses that have permanently closed, of course, would not be eligible. Per the legislation, there are some priority groups that need to be at least 51% owned by one or more persons who are women, socially or economically disadvantaged, veterans, etc. And those owners need to have daily control and management of the business. SBA is actually being very reasonable with this. So a restaurant that maybe has 5 owners, 2 of them are women and 1 of them is a veteran, they would consider that a member of a priority group, even though it's not one specific priority group. So, that's, like I say, they're being a little bit flexible with that. So that's a good thing. Who's not eligible? State or local government owned or operated locations are not eligible. Operators of more than 20 locations, regardless of doing business under the same or different names or in different industries, are not eligible. If you've got a pending shuttered venues operators grant application, you're not eligible. If you're publicly traded or participate in public equities markets, I realize that I doubt there's anybody on this call that is raising money in public bond markets, but I'd be remiss if I did not mention that. Nonprofits are not eligible to participate in this. So there's a difference between being a registered nonprofit versus just not making a profit. But nonprofits cannot participate in this program. We don't know yet also what the minimum value will be, but they will not process an application for a minimal amount of money. So if you're only going to get, $100, $500, $1,000, they may not process the application. If you're on Treasury's do not pay list, which is a list that Treasury maintains for people who have defaulted on obligations to the federal government. Now, that said, if you're in a tax settlement agreement and performing on that agreement, that does not prevent you from participating in the program. If you're on the list of the Office of Foreign Assets Control sanctions, I'm not sure if anybody on this call would fall into that category, but if you've got an owner of 20% or more of a restaurant who is on that list of sanctions, that might preclude you. Or if you're on the death records list. Now, I point that out only because in other SBA programs, we run into it where people were mistakenly on a death records list, where it was a same or very, very similar name and very similar birth date and things like that. So if you've run into that before, keep in mind that that may be an issue in participating with this program as well. A couple of definitions to keep in mind. Majority ownership, they're targeting underserved populations. That's the socially and economically disadvantaged. Size regulations, again, I doubt many of us on this call are going to run into that, but there is going to be, there will be some employee limits. The numbers are going to be like 300, 500 and up from there. So I wouldn't worry too much about that. One of the things that I would worry about, even for folks on this call, affiliation. There's a fairly complex set of affiliation rules with the SBA. And if you own 20% or more, that tends to be the trigger number generally for SBA is 20%. So the affiliation rules, if you own 20% or more of an entity, it is considered affiliated. So if, for example, you own 20% of restaurant A and 20% of restaurant B and 20% of restaurant C, those restaurants will now all be considered affiliated. If that's a circumstance for you, I would urge you now, before the program opens up for applications, I would urge you now to check out what affiliations you may have and what impact that may have. We don't know yet, again, because they haven't announced all the rules yet, but we suspect, kind of like with SVOG, there's going to be a maximum number of locations or applications that could be received from an affiliated group. That number tends to be in the range of like 5. So it's pretty easy suddenly for affiliates to start to reach numbers. So, if you think you may have an affiliate situation, get some professional advice on it. It'll make a difference. There's gonna be a bunch of documentation and certifications that are required for this, including your corporate formation. When did you form? When did you start the business? How long have you been in business? When were you in business? The individual who is doing the application, who has to be a signatory of the company that's doing the application, is also going to have to provide a photo ID. And this will all be electronic, by the way. None of this is going to be on paper. This is all an electronic thing. Principal business activity. Again, that's one of those things that SBA does have some definitions for. You can find them in, for those who want to write this down real quick, Chapter 13, go to Federal Regulations, Section 121.107, that defines your principal business activity. They consider essentially the distribution of receipts, employees, and costs of doing business among the different lines of business activities in which the business operations occurred for the most recently completed fiscal year. So if you used to be configured one way and are now configured a different way, they're going to look at your most recent year. Majority owned or controlled is defined also, and in its various programs, SBA defines majority control to mean at least 51% ownership. So if you got 2 partners and you're 50-50, that's not 51. Not trying to split hairs here, but that's the case. And there has to be evidence that there is daily control, signatory on bank accounts, actually show up in the location, actually work in a kitchen. There has to be evidence that there is that management and control as well. There will be self-certification of minority group status. That may sound scary. Yes, applicants must make a good faith certification as well that the uncertainty of current economic conditions makes this grant request necessary to support ongoing operations of the entity. And I certify that I am in this group or that group. If I sent in, because we're doing a photo ID thing with this, if I sent in a picture of my driver's license, I couldn't exactly say I'm African American. They'd say, geez, you look a little too Irish for that. So, just keep that in mind. The Small Business Act defines socially disadvantaged individuals as those who have been subjected to racial or ethnic prejudice or cultural bias within American society because of their identities as members of groups without regard to their individual qualities, and the social disadvantage has to stem from circumstances beyond their control. By definition, Black Americans, Hispanic Americans, Native Americans, Asian Pacific Americans, and subcontinent Asian Americans are essentially defined as being disadvantaged. As you get ready to apply, even though the application isn't out yet, like a good meal, preparation is extremely important. Prior to the program launching, get your documents together and document your revenue. I will try to be as polite with this next statement as possible. Restaurants, unfortunately, the industry has a reputation for not always being the most, shall we say, honest in terms of bookkeeping. You have to be able to prove these numbers. One of the things you will fill out in this application is going to be a 4506T, which is a form that lets the SBA get copies of your tax returns from the IRS. So if you say my restaurant did $1 million worth of business and your tax return shows 500,000, it's going to be a problem. Additionally, this program does not, unlike EIDL, this program does not have an appeals process. So a rejection in this program, that's it. This is a one bite at the application program. Some programs, there's appeals, like EIDL. If they gave you X, you could say, no, I need more, and you could file an appeal. Maybe you get it, maybe you don't. They could say, no, you don't. We don't want to give you this EIDL loan. You could request an appeal of that. There is no appeal with this, so make sure your numbers are right on day one. The only interaction with other programs that Restaurant Revitalization has at this point in time is that they will be deducting the value of PPP loans received, first draw and second draw. The sort of rule we use on that is that the federal government only gives you free money once. PPP2 was the exception to that. But the government's going to say basically, well, we already gave you this for free. We're not going to give it to you again for free. So they will deduct it. So it'll be your sales from 2019 minus your sales from 2020, which will be a lower number. That's the amount you're eligible for, minus the value of PPP loans received, regardless of forgiveness. It doesn't matter if your loans were forgiven or not. They're going to take the entire value of the loan off. Make sure you've got your organizational documents available. When were you incorporated? Were you in business on the appropriate dates? If you weren't, we can get into that after this. We don't really have time to go into that. There are some special ways that they will be looking at restaurants who started during the pandemic, who were closed for extended periods and reopened. So there are some other ways we can look at some stuff, but we don't really have time to get into it here. Make sure you've got your financials and last 2 years of tax returns available. Even though the application isn't out yet and we're not sure of the entire list of documentation, it is the government. They have lots of questions. I apologize for the background noise. They're doing some lawn maintenance outside my office this morning. So you will need financial information, identifying information for the business, status of the business, ID information, personal information. They will want personal tax returns as well. If you've never done a grant application, it can be kind of complex. They can ask for lots of information, some of which may be expected, some of which may not be. They're also defining this application what they're calling an ecosystem, which makes sense. For those familiar with programs like TurboTax that can go retrieve bank information or W-2 information, brokerage information, things like that, You can give them access in this application to your Clover system and several others, such that they will go read your information directly from your system. I'm sure some folks don't want to do that, but you will have that choice. We don't yet know when this application will open. We believe it will be around the end of April, and the SBA actually has several teams working on this to build this portal. You can visit sba.gov and register for updates, and they'll email you an update. And I'll mention it one more time to be blunt. The restaurant industry does have a reputation for inaccuracy. This program does not have any flexibility. Your numbers are going to be matched to tax returns and bank accounts. They've got to be accurate. So please be very, very careful in terms of how you're treating the information for the application. Just to rehash a little bit, your basic documentation, tax returns, business and personal and partnership. Bank statements may be required. Sales reports may be required. Those sales reports will have to either be from some sort of accounting software, perhaps QuickBooks or whatever, and signed by an appropriate person and verifiable. You've got to be prepared to prove the source of the income. If specific on-site restaurant sales, now on-site does include to go. It's considered on-site, the sale took place on-site, are not 100% of your revenue. So hotels, inns, brew pubs, things like that, you've got to be able to prove which revenue came from where, which revenue came from the restaurant and restaurant sales, which revenue came from the beer sales, if you're a brew pub. And that would be beer sales like to go, package sales as opposed to premises consumption. If you do alcohol, if you are a brew pub, winery, cidery, things like that, you're probably also going to need, we don't know this for sure, but probably going to need your tax and trade bureau filings, the TTB 5130.9s. They're going to ask for that because, again, there's verifying information on those forms. Kind of like with Paycheck Protection, there's going to be lots of folks out there offering to do lots of things in terms of getting you this free money. Beware of anything that is not on a .gov website, and the .gov has to be the last portion of the address. So you couldn't have like tomgov.com and be a gov website. No, the last portion of a web address needs to be .gov, so you can be sure that you're working with an appropriate entity on stuff. If you don't have a scanner or don't have one available, you may want to consider picking up a cheap scanner, because you're going to have to, again, this is an all digital application. You're going to have copies of things that you can transmit electronically. If you're good with your phone, taking pictures and then getting the picture into your computer and then getting the picture from a JPEG or some similar thing into a PDF, yeah, that'll work too. Just be prepared for it. Okay. The federal allocation for the program right now is $28.6 billion. It's a lot of money until you look at an applicant pool of more than 955,000 businesses, and that's only as of 2018. Now, we did lose a lot of restaurants in the pandemic, granted, but if we look at this, just in terms of restaurants, 660,000, 60,000 bars, 87,000 hotels are in, 6,000 food trucks, 135,000 caterers, 8,800 wineries and cideries. That would essentially equate to about $29,919 each. Obviously, not everybody's going to apply. Not everybody's going to be successful. Not everybody's still in business. But there'll also be a bunch of folks who are going in there for $3, $4, $5, $7 million. That knocks out a lot of $29,000 people. So be prepared early. We don't yet know when early is going to be, but I suspect it will be toward the end of April, certainly by early May. Be ready to go as soon as the program is ready to go. SBDC is here to help you. RBA is here to help you. Jeremy's office is here to help you. So lots of folks can help you. Again, we've not received our final guidance on the overall program yet, but there appears right now to be a $5 million maximum per location to a $10 million maximum for all affiliated businesses. So if you've got two $6 million restaurants, the max you can get is $10 million. If you've got several locations, you may want to look at it and decide which ones are the ones that are actually going to apply. because the grant amount is going to be calculated based on your pandemic-related revenue loss between 2019 and 2020. In terms of gross receipts, they will then adjust that. They'll be looking at expenses as well. You're going to need a P&L. You're going to need expense summaries also. Again, for some of the special cases, there's ways that we can do average sales things. Reach out and we'll help you in terms of how you'll do that. And I think we get this on a bit of a later slide, but be prepared if there seems to be an error. You might get a phone call or an email about it, but if your application is rejected, that's it. So please make sure your stuff is accurate going in. How you can use the money. This is the good part. You can use it for most operating and ordinary expenses, payroll, supplies, food and beverage expense. Usually the government doesn't like to pay for liquor. Like we're federally funded in part and we can't pay for liquor. But you can, so that's a good thing. You can use it for rent, utilities, mortgages. You cannot prepay a mortgage. You can use it for debt that was in place on a selected date, and that date is likely to be somewhere around February 15th of 2020. That's the date that's been used in other programs. They don't want you paying off debt that you created after that, but you can service debt that was in place. If you got leases on equipment, things like that, that's all eligible debt. You pay utilities, maintenance fees, personal protection equipment, leases, insurance, etc. Disallowed expenses include things like buying real estate, making investments, making loans, or contributions or political advocacy. So no, you can't contribute to a political campaign. There's also another category. You can't buy real estate, by the way, either. And there's another category, and that's called any other use prohibited by the administrator. So if it's an ordinary and general expense of your business and your business historically has incurred that expense, it's probably going to be okay. Make sure you're using a standard accounting format like a FASB or some such thing, or GAAP, that your stuff complies, that your taxes are filed, and all those sort of things. Make sure your sales tax filings match what you're reporting as well. In terms of record keeping, we don't yet know what the time frame requirement is going to be, but you'll have to maintain documentation demonstrating compliance, both with your program eligibility and the use of the funds, probably for a minimum of 4, 5, or 6 years. And that we're just judging that based on how other SBA programs have operated. Be prepared for an audit. It may be what they call a desk audit, in which they send you a letter and say, okay, you received this money. Please tell us how you spent it, and send us a couple of invoices and copies of this or copies of that. They are stewards of government money. So put your taxpayer hat on for a minute and say, well, they're giving money away for free. I hope it's going to the right people. Well, that's what the audits are going to do, is determine, did that go to the right people and did they use that money correctly? Anything over $2 million is guaranteed to be audited. Between $1 and $2 million, you got a very high likelihood of being audited. Under 50,000, probably not. It's probably a much lower percentage there because it's the law of diminishing returns. But be prepared for some follow-up to this. It's not that they're just going to send you the money and wish you well and send you on your way. They want to make sure that you're going to use the money correctly. Okay, subsidiaries and affiliates. We talked a little bit about this earlier. The affiliate rules are complex. If you think you are or may be subject to affiliation, get some advice from a professional, because affiliation exists when one business controls or has the power to control another, or when a third party controls or has the power to control both or more businesses. Control can arise through ownership, management, other relationships, or interactions like contracts. Companies that are operating other businesses on behalf of people, things of that nature. SBA can also find affiliation based on an identity of interest between individuals or businesses, including family members. I'll point you out this time to Chapter 13. Chapter 13, Code of Federal Regulations, Section 121.103, Paragraph F. So again, if you think you might be in that situation, get some advice professionally before you end up with an issue. SBA affiliate rules apply to maximum limits and even the number of applications. So if you're a lucky person and you own 10 restaurants and each restaurant would qualify for $2 million, sorry, you're only going to get for the entire group of restaurants $10 million. I realize that probably is not going to affect most of us on this call, but one never knows. Whoops, sorry. Those two links right there. We'll send the slides to RBA, and they can send the slides out to you guys that were here today. And those two sites will give you some information in terms of the affiliate rules and size standards and things like that. If you got any other questions, I would say, give us a call, SBDC. We are 845-356-6065. Call RBA. Al will get the question over to us. And if I can get my computer straightened out here, I can, whoops. Okay, I guess it did what I needed it to do. Good. All right. So I stopped sharing my screen. Sorry that was so abrupt, guys. Sometimes it works smoothly, sometimes it doesn't. So if you got any questions, I'll be happy to try to answer them. We do have a little bit of additional information. In terms of covered periods now, they've at least started to release a little bit of information from that in terms of when you can use the money and when you have to report having used it and all that sort of stuff. So it is, look at this way, it's a great program that does recognize that you guys have been hit very, very hard, harder than most other industries. However, kind of like, the first round, even the second round, to some extent of paycheck protection, lots and lots and lots of people will be applying for this. Get your space online, get your documentation ready. If you're not on the list, if you're not in the basket of applications, you can't get the money. SBA at some point is likely, kind of like they did initially with EIDL, when they reduced EIDL amounts to $150,000, regardless of how much money you needed. If they see that this money is moving too quickly, they'll probably do something like that and say, okay, the max we can give anybody is $50,000. So early bird gets the better worms. So with that, any questions, guys? I'll be happy to try to answer them.
Tom, I want to thank you. You really gave these folks the harsh realities of this program in terms of the application, the attention to detail. When the government's giving away this much money, it's our money, it's your money. And so there are controls that are being placed on it. And I think that we should all welcome that. But knowing about it in advance, I think would be very helpful. We do have time for a couple of questions. I think that maybe we should limit it to folks up front who are eligible for this. So a restaurateur, a hotel owner, someone in the food industry. If you have a question, let's start with you.
And Al, one thing that I will commit SBDC to is as soon as we do get official guidance in the program and have details in terms of when the portal is going to open, we'll get another meeting scheduled with the folks from RBA in terms of, here's exactly what we now know you need. Here's how the rules are being interpreted. Here's when this is going to open. So as soon as we have that, you guys will be the first to know.
Thank you for that. Okay, does anybody have a question?
I do.
Of course you can. Was it Angelo?
That's me.
Hi, Angela.
Good morning, all. Tom, pleasure to finally see your face after all these phone calls.
You got a point there.
Yeah. Okay.
I originally thought you had more hair than that, but okay.
Oh, I lost that when I was 18. That's okay. It's been gone. I do have one question. I was curious about, I know about the adjustments, the PPP I heard of. Expenses. I mean, it's very easy to say gross receipts from year to year, but what other expenses are they going to deduct from that? Do you know?
So far, the only thing we know that they're deducting from the award amount is going to be PPP loans.
Okay.
That's it. EIDL, we've already confirmed EIDL is not going to be deducted from that. Cool. Which would, and I'm glad they decided that, because it'd be kind of stupid because someone's going to qualify for $100,000 on the restaurant revitalization, and the fact they owe $100,000 on EIDL, be like, okay, well, we're going to take that $100,000 off your revitalization. It doesn't make any sense. So that stays out. Paycheck protection, though, was free money. It's like, okay, we're going to give you this money. If you spend it right, we won't make you pay it back. So that's the only deduction right now is for that. That said, for folks that may or may not have other issues with the federal government, unpaid taxes, things like that, there's also a thing called the Treasury offset list, which I didn't include. And because I'm not sure if it's going to apply or not. They're not applying it to consumers, but they might apply it to businesses. Treasury offset is like, okay, you owe the government, $1,129.04 from some tax bill 8 years ago. They may deduct that from your final award because you still owe that to the government. That's the Treasury offset list. It's not a do not pay list. It's like you still owe us this, so we're taking that off what we're giving you. But that's the only adjustments that we've had any indication of at this point in time.
Thank you. And by the way, I take a little offense, restaurants being a little bit shady characters. I don't know what you're talking about. You know, I went through a sales tax audit and they shook my hand because I opened up my computer screen to them.
Absolutely. And I applaud, businesses that do it right. Yeah, I applaud you. I know it's easy sometimes to try to do it in a different manner.
Comes
But
back to get you.
on more than one occasion, I've said I'll meet someone at a diner and I get there and find a padlock on the door and a sales tax notice stays on the door. The government is the most expensive borrowing you can do when you owe the government money. And with all deference to bankers and rates and everything else, I see People's United is with us today, and I commend them for that. Don't fail to pay the government. They survive bankruptcy. They survive a lot of stuff that nobody else survives. All the entire ball is in their court to get their money eventually, and they will get it eventually. You'll never get another tax refund. They will be coming after you for a long time. SBA has hired something on the order of 5,000 or 6,000 people in the last couple of months to work on the various programs. Well, a lot of those folks are assigned to validation of applications, information that's in applications, confirming things that have been said on applications. They're checking stuff out. And I can't say I blame them. So, I applaud business owners that do it right. In the long
Can I just
run,
jump in 1 second?
sure.
Were you through, Tom?
Yep, sure, that's fine.
Okay. Was there another question? Because you can always get in touch with the SBDC office, when Tom and his folks, if you have questions about this. And as Tom said, as soon as there is more information that is specific, we will also get that information out to you. Again, I want to thank you, Tom, and I really appreciate your candor. And I hope the folks who are listening to this do as well. I think that was very helpful. These kinds of grants can be daunting. They can be intimidating. Don't let that happen to you. There is real money out there to help you. Take your shot at it. And there are people here like Tom, like Jeremy, like the RBA. We're here to help you to get that portion, whatever portion it is that you can get from this.